Investor Briefing webinar. It's a pleasure to have you with us. My name is Lucas Robinson from Investor Relations Consultancy Corporate Storytime. Jindalee Lithium is an ASX-listed company focusing on developing the McDermott Lithium project, which hosts one of the largest lithium resources in the US. It's my pleasure to introduce Jindalee Lithium's CEO and Managing Director, Ian Rodger, and Executive Director, Lindsay Dudfield. Today, Ian and Lindsay will be walking us through the company's recently announced non-binding letter of intent with Constellation Acquisition Corp, a US special purpose acquisition company, or SPAC. The proposed transaction would see Constellation merge with Jindalee's wholly owned US subsidiary, Hi-Tech Minerals, in a deal which assigns a value for McDermott of $500 million US. Following the presentation, we'll open the floor for Q&A. You're welcome to submit your questions at any time during the webinar via the Q&A function at the bottom of your screen. If we're unable to address your question during the webinar, we'll follow up with a response afterwards. So without any further ado, I'm pleased to hand over to Ian and Lindsay.
Thanks, Lucas, and welcome everyone. We're very excited to walk you through a broader update on Jindalee, but also specifically focusing in on this recently announced LOI with Constellation Acquisition Corp. I'll invite people to look at our disclaimer and warning statement. We'll be making forward-looking statements, etc. As mentioned by Lucas, we've recently signed this letter of intent with Constellation Acquisition Corp. I look forward to running you through that today. I'll be running through the presentation, but Lindsay also joins me on the line today and will be available for Q&A and comments through the presentation. Before I get into it, for those investors less familiar with Jindalee, I really just wanted to really outline why Jindalee is a compelling investment opportunity. Clearly, we're one of the largest undeveloped lithium deposits globally, but particularly in the US, we're the second largest. Our PFS outlines a very large, long life, low cost source of American-made lithium chemicals, and that's really important from the US context. It's just not mining; it's mining and processing, and the potential to produce lithium in the United States. It's located adjacent to the Thacker Pass project, which is currently under construction and funded through the government, federal government, and General Motors. And we also have a really strong potential for material co-products, including magnesium. So very, very strategic asset to the US, and that's been recognised, from some of the government support we've had. We're one of the first Fast 41 projects added to that list. We're working with the DOE under a cooperative research and development, DOE under the cooperative research and development agreement we entered into last year, and we're very well poised to benefit from recently announced funding via President Trump's big beautiful bill that got passed earlier this year. So we're very strategic asset, very well positioned, and gaining further US support this year as we've managed to push the project forward. In terms of the market, I'll get into a little bit on that later in the presentation, but clearly, sentiment's emerging from a low, demand growth very strong, and McDermott is one of the few advanced projects in the US that's set to really capture this cycle as we exit from what has been a bear market over the last 2 years. And then lastly, in terms of compelling catalysts ahead of us, I'll step through the SPAC transaction. Clearly, there's potential for a material re-rate as we work through that transaction and get it closer to completion. Additionally, we're pushing numerous work streams ahead at the asset level with a major permitting milestone expected later this year, particularly of note. So, very, very strategic asset, a lot of catalysts in the pipeline, and a really pathway to a multiple return. So we think that's really interesting for investors looking to capture the benefit of this improving lithium market. Just briefly on our corporate structure, for those that have been a shareholder for a while, you'll know this history, but obviously we've been listed for circa 23 years. We've got a very tight capital structure. We haven't raised a lot of equity. We've projected shareholder capital. There's about 80 million shares on issue at the moment. As of June 30, we had $4 million in the bank. Lindsay, who joins me on the line today, founder, executive director, holds circa 24%, with the top 20 holding about 70%, and a lot of those shareholders have supported us over a long period of time, and have been key to the success of the company. Primarily, our invested base is high net worth. There is a US institution, being Mercer Street, on the register. But as you can see from the stock price chart, we bottomed out early this year at circa 20 cents, and we're up roughly 100% year to date on the back of the PFS, the Fast 41, and other momentum we've built as part of the recently announced potential SPAC transaction. Providing a quick overview of our pre-feasibility study that was released in November last year, outlines a 63-year project life with 47,500 tonnes of lithium carbonate production, expected to be in the bottom half of the global cost curve, highly competitive with North American peers, being other sedimentary deposits and brine style deposits. That project life is only using 15% of the resource base, and so really there's a whole lot more upside to unlock out at McDermott, and the forecast profile for the project looks in a lot of ways like a large copper porphyry asset. Significant capital investment, but very high margin with annuity-like cash flows, and produces, like I said in the opening slide, lithium chemicals in the US, and that's the really attractive bit from a US perspective, is that it really trying to controls the lithium processing in particular, less so the mining, and so this is really provides the ability to materially decouple that supply chain, which is part of the reason why we've been able to generate the interest from the US government side. In terms of PFS, look, high quality piece of work done by blue chip engineering group in Fleur, but lots of opportunities for enhancement. We completed that work on a relatively tight budget, with limited sort of trade-off optionality options and analysis. So we expect to do some of that ahead of our pre-feasibility study, and expect we'll be able to improve capex and opex. Similarly, we're also investigating opportunities around production of byproducts, including magnesium. I'll talk to that a little bit later, but we hope to provide a bit more of an update on that in due course. But we see the material upside there through unlocking some of these potential byproducts in addition to the primary lithium base. In terms of the Fast 41 I mentioned earlier, look, Fast 41 is a federal framework aimed at streamlining permitting, improving transparency between different agencies. As I mentioned, we were one of the first 10 projects on there. There's been a few more added now, but we're still one of, I think, circa 3 lithium projects on that list. And we've really noticed a change in disposition from, particularly the Bureau of Land Management, who are our lead agency in terms of permitting. And so that really bodes well for, the permitting process going forward. And, we've noticed faster turnaround times, etc. And we're working on, this exploration plan of operations we expect to be approved in the December quarter. And so that really bodes well for that. Now, in terms of the transaction or potential transaction we announced earlier this week, I think it's important to start with a little bit of context. Since April, we've been evaluating a range of strategic alternatives to unlock value from McDermott. That's included wide range of things from joint ventures to other structures to SPAC proposals. In relation to SPACs, we've been working with a very experienced US advisor set for since April. So this is not something that's been done quickly. It's been entered into very carefully. We generated a number of different proposals from different groups and a strong level of interest out of the US, given the strategic nature of the asset. And we've worked really closely with our advisors to in that selection process and picking what we think is the most compelling and best pathway forward to unlock value for our shareholders. Constellation, were selected not only because their proposal was the most attractive commercially, but also because their sponsor, Antarctica, are a very large investment fund in the US, multi-billion-dollar under management, and they expected to contribute capital alongside the transaction, and that's very important, and we think it helps reduce risk in terms of being able to attract the funding into the SPAC required to materially advance McDermott. While this remains a non-binding LOI, we've taken, I guess, a more cautious approach than is typical at this stage. As a result, the LOI contains, I guess, a far greater level of detail than you would normally see in these circumstances, and I think Constellation would attest to themselves. That being said, there's still, a long way to go on this process, and I'll step through that. Our approach to the LOI has been really kind of deliberate in that regard. We wanted to make sure that we established a transaction that we thought would really deliver value for shareholders, and that we both, us and Constellation, have clarity as we move forward. In terms of the structure of the transaction, I guess a picture tells 1,000 words with regards to that, and you can see that on the slide today. At the moment, Jindalee structure is obviously owns 100% of High-Tech Minerals, which then owns 100% of our McDermott project and also Clayton North. In terms of the proposed structure that's contemplated under the LOI, High-Tech would merge with Constellation to form a new US listed entity, NewCo. As part of that transaction, we seek to raise $20 to $30 million, and that's targeted to fund the advancement of McDermott through materially advance the feasibility study. Antarctic affiliates have indicated they'll commit $4 million as part of that, and that would be sort of committed at the BCA stage. And so we think that's a very attractive part of this transaction, having Antarctica there to essentially provide that level of funding to help support the capital raise. Jindalee will remain as an ASX listed company, retaining 80% interest in NewCo, and management will be shared across NewCo and Jindalee, ensuring continuity and alignment. And upon completion, NewCo will list on a major US national exchange. That's not settled exactly which exchange that'll be, but based on what we know today, that's most likely to be the NASDAQ. But there's still a bit of work to do to fully understand that as part of our as we work through the BCA, etc. In terms of the strategic rationale, look, our strategy has always been to Americanise McDermott. The natural owners of this project are US investors, and this transaction really provides a pathway to achieving that, and providing a pathway to recognise value of McDermott. The structure provides a less dilutive way to raise capital to progress McDermott while preserving Jindalee's majority exposure. It also positions us on a stronger platform to access government support programs, including grant funding, future project financing, whether that's through the various facilities available through the US government, and ultimately providing a more compelling avenue to access significant capital required down the track for development, etc. In terms of the pathway forward, we are at the LOI stage, non-binding stage. The next step is negotiating and executing a binding business combination agreement, which we expect to work through over the coming months. As part of this LOI, we have a 90-day exclusivity period with Constellation, in which we'll lock arms and work together to complete due diligence and finalise that agreement. In parallel, we'll be undertaking marketing to potential SPAC investors to participate alongside Antarctica in that $20 to $30 million raise as part of the listing on a major US exchange. And this will allow us to enter the BCA stage with a higher degree of confidence that the funding will be achieved, and the transaction will achieve its objectives. Assuming the BCA is signed in December quarter, the process will then move into the regulatory phase, which is expected to take around 6 months. And so that's why we're guiding it as part of this, that if we sign in the December quarter, the close of the transaction would be expected at the tail end of the first half of next year. And while there's no guarantees this transaction will complete, I think it's fair to say that both Jindalee and Constellation are strongly, and Antarctica, I should say, are strongly aligned and motivated to see it succeed. And then with that, I might just pause. Lindsay, did you have any other comments while I'm on this slide?
Look, for those that have been following Jindalee for a while, we've been a project generator, and our modus operandi, if you like, is to take projects up the value curve to a point where there's in some cases we've spun assets out, and so this is, in a way, it's like spinning out McDermott to list it, but in this case, listing it on a US exchange rather than ASX, which is where all of our spin outs to date have listed. And it makes perfect sense, as you said, Ian. This is a US project. The logical natural owners of the project are Americans. There's a very deep capital markets in the US to fund the project, going forward, and so we think, so it's a logical process. So I'll just pause there.
Thanks, Lindsay. I'll provide a bit more, I guess, commentary on the market. Look, following a period of high prices in 22, clearly the market's been in a bear market over the last sort of 2 years, and we're currently sort of emerging from that 2-year downturn. Analysts' sentiment is flipping. Key analysts in terms of Canaccord and UBS have really, and particularly in UBS, have been are quite bearish on the sector, have sort of flipped. And acknowledge we're in the early stages of recovery. As evidenced this week, the recovery will be volatile, but the good news is that the market fundamentals are very strong and improving. We've got a price that's still well below incentive price. We've seen some supply disruption, but the main key that's often lost is that the demand is very, very strong. Electric vehicles are growing at a very strong rate, and energy storage is up over 50% year to date versus same period last year. So we're seeing very, very strong demand growth, and so on the back of that, analysts expect that those deficits will be more in the near term than initially thought. When we saw the market flip into bearish mode in 2023. There was sort of a consensus view that we're going to be in surplus till the end of the decade, and that's consistently been drawn forward. And you can see on that chart there that deficits are expected as early as next year, with pricing to tighten as a result. And so we think the next 12 to 24 months is going to be a very exciting place to be in the lithium space. And if history is a guide, we'll see. It'll take a while for the recovery to set in, but then we'll see. The market improve quite dramatically. It doesn't go in a straight line. So we expect, next year to, the market to continually improve. And I think projects like ours that are more advanced have the real opportunity to, capture that upside as the scene set for, a material improvement over the next 24 months. In terms of the pathway ahead for Jindalee, I've touched on the SPAC side of things on the previous slide, but just to reiterate that, for the remainder of this quarter or over the next 2 months, I should say, focus on confirmatory due diligence from both sides, BCA negotiation, marketing to SPAC investors, with a view to reaching a binding business combination agreement sometime in the December quarter. And then the back end regulatory work after that to get it listed on a US exchange. I think we're working with some very experienced advisors in the US that have completed a lot of transactions, SPAC transactions and listings, etc. So and we've sort of mapped out that work program. So I think that's been part of the front end work that we've done on this to get comfort around what that process looks like. Not to say that there isn't risks, but we've done a lot of work in that regard. Assuming the SPAC deal goes as planned, we'll be in a position come the middle of next year to have the funding available to commence the FS. On that second line of this table, is approvals. Clearly, we've got a exploration plan of operations that we expect to get approved later this year, and then so that'll help unlock the large drill program next year. And so the intent would be that would be part of the early stage of the feasibility study to do that infill drilling to generate the sample for test work, and the funding from this SPAC transaction would help fund that drilling, not the approval. I mean, in terms of the project, we're investigating potential for byproducts. Clearly, magnesium is one we've spoken about in the pre-feasibility study, and we'll flag that. And historically, we haven't done a lot of work on that, but magnesium is right up there in terms of the critical minerals importance for the US. And so we hope to provide a bit more update in due course around our work in regards to that. But that's work that's ongoing. And then finally, in terms of government funding, we have a DoD grant application afoot that could contribute funding to the FS. And it's worth flagging that the recent funding bill, the big beautiful bill that passed through Congress earlier this year, is expected to unlock a number of funding opportunities, in particular grant funding opportunities that we plan on pursuing in due course. And we think we're very well placed, given the strategic nature of this asset and where we're at, to be able to access some of that funding. But again, we'll provide further updates in due course. And I think, in closing, before we get into Q&A, in summary, from my perspective, just to summarise, is McDermott, remains very strategic asset. We'll continue to build momentum and government support. The FAST-41, the DOE, that hasn't really flowed through to our share price yet. It's really cheap on a relative basis, and the SPAC equity valuation really just highlights the value differential here. We've got significant catalysts in the pipeline, as we sort of outlined here, both from the transaction point of view, but also from de-risking the asset, etc. And combined with a recovering lithium market over the next 12 to 24 months, we see real opportunity for that asymmetric returns, as we sort of continue to execute on our plan. With that, Lindsay, maybe I'll just leave it to you if you had any other closing comments. Otherwise, we'll go into Q&A with Lucas.
No, Ian, I think you've summarised it very well. Obviously, the transaction is not without risk, but we believe that the risk-reward profile is compelling, and obviously that's why we're pursuing this opportunity.
Well, great presentation, Ian, and thanks for your contributions as well, Lindsay. So the first question I have is, how can the listed SPAC in the US, which will hold McDermott, obtain a valuation which is so different from the valuation Jindalee currently attracts on the ASX? And what would be the approximate value in Australian dollars of one Jindalee share under the new proposed arrangement?
Look, we know investors are parochial. I myself, I prefer to invest in Australian projects, preferably listed on the ASX. It's no different in the US. We've seen for a period of time now that McDermott is traded as represented by the Jindalee share price, is traded at a significant discount to our North American peers. If you have a look on the ASX, this presentation has been lodged on ASX. Towards the back of the presentation, there's a slide that compares our value, if you like, expressed market cap versus the contained lithium in resources to our peers, and we're trading at about a quarter of the value of those North American listed peers, and I think that's clearly because of the parochial nature of investors. We do trade on OTC. We're not listed on OTC because the trades actually settle against our ASX listed stock. But that is very expensive because of that, detailed process. It's very expensive for US retail investors to buy and sell Jindalee shares. We've had quite a few complaints actually from retail investors who at the expense of the process, and it's a bit off-putting for them. They're used to trading for zero commission on platforms like Robinhood and whatever, and have to pay full brokerage. And quite a complicated process to trade on OTC is a bit off-putting. So obviously, listing on a US exchange, Nasdaq or New York Stock Exchange will eliminate that issue and make us more attractive to US retail investors. Our PFS indicated an NPV of post-tax of 3.2 billion US. A 63-year project life, as Ian indicated, and a payback, for the size of the capital investment of around 5 years, which is very fast for a project of this scale. And so because of those metrics, and I can't speak for Constellation, but I guess they're looking at a recovering lithium market over the next 12 to 24 months, a valuation of 500 million US for the project. Clearly, they're confident that the market will support that. And I should also say that early negotiations with our advisors, but encouragingly, it seems that they're prepared to equitise a lot of their fees. Rather than taking it in cash, take it in shares in Nuco. So that's I think a pretty good sign as well that they'll be aligned. Regarding what our shares might, the look-through value of Jindalee shares based on the transaction. So look, it's obviously a $500 million valuation. That's 65 cents. Some of our investors have done very simple maths on it, and they've said, well, that's 750 million Aussie. There's 79.9 million shares on issue currently. That equates to a value of $9.40 Aussie for Jindalee shares. Clearly, that is super simplistic. I wouldn't agree with that at all. First of all, that's it does indicate obviously a significant uplift, but quite misleading, I should say. First of all, it's we'll keep stressing it, and it's all through the announcement released on Tuesday. The transaction is yet to complete. There's risks that it won't complete. So obviously, I'm cautioning investors to that. And even if it does complete, as we hope it does, there's no guarantee that Nuco shares are going to trade at $10 US. They might trade lower. Who knows? They might trade higher. But so that's we're really crystal ball gazing there. But one thing I can be sure of is that we'll have more than 79.9 million shares on issue by the time Nuco is trading, because we've got options, that will be exercised, for example. So look, I would step away from that and say, look, don't do the simple maths, because you will wind up with the wrong number. But it does illustrate the significant uplift, for Jindalee shareholders should the transaction complete, as we hope it does, and that's why we're actively, vigorously pursuing this opportunity, because we think it does represent a material, creation of wealth for shareholders, our shareholders, and hopefully Nuco shareholders alongside us in the fullness of time.
Thank you, Lindsay. There certainly is some upside if there's some parity between the two listed entities. The next question relates to, is Jindalee interested in acquiring other assets should this transaction complete? And if so, what sort of assets might appeal?
Yeah, thanks, Lucas. I think we flagged in the LOI announcement that we'll continue to look at other opportunities. If you obviously look at Jindalee's heritage as a project generator, etc., and taking projects up the curve. As we get closer to completing this transaction, we'll look further at different assets. What I'd say at this point is that we've historically been opportunity driven. We've been sort of commodity and jurisdiction agnostic. At this point, it's probably too early to provide details around that. Other than that, it's going to continue to be a focus of looking for other opportunities alongside completing this transaction.
Thanks for that. The next question pertains to approvals. So when will Jindalee have approval for the planned upcoming drill program at McDermott? And can you comment more generally on the approvals process for the project?
Yep. So currently, there's basically 3 levels of approval. The main approvals for the project are through the BLM, and so there's notice level, exploration plan of operations, and then mine plan of operations approvals, and then there's state related and other approvals. But the high level federal ones are those levels, and so we've had existing approvals under our notice level to do drilling. That's what we've operated under to date, and we still have permits in place to do some additional small scale drilling under those permits. But like I flagged, the next stage for us is this exploration plan of operations. That's we're nearing the completion of that. We've completed an environmental assessment. We're updating that after public comment period, and that record of decision, etc., is expected towards the end of this year. And that'll be the key to unlocking that larger infill drill program, etc. So we're well progressed on that. Been working on that for quite some time. The next stage will be the mine plan of operations. The feasibility study will feed into that, and so the time we're working on developing a more detailed schedule with our new VP of projects in place, at looking at trying to get that in at the earliest possible time, which will then allow the project to be approved in the fastest possible time. But we're working through the detail on that ahead of the feasibility study, and looking at what the exact timing of that approvals look like. But the near-term focus is clearly getting the exploration plan of operations approved.
Thanks, Ian. Can you make a comment on which exchange in the US you'd most prefer to have the new co-listed?
Yeah, look, at this point, we're looking at either the New York Stock Exchange or the NASDAQ. I think there's a couple of factors which would lead us most likely to prefer NASDAQ, but I think it's too premature to make a categoric statement around that. But we'll work through that over the next couple of months as we progress the transaction.
Thanks, Ian. The next question reads as such: has Jindalee's leadership or team had direct meetings or engagements with representatives from the Trump administration to discuss the project's role in advancing US energy security? And if so, what key outcomes or commitments emerged from these discussions?
Yep. Short answer is yes. We were in Washington in June, and we're likely to be back in the next couple of months as well. We've met with we had meetings in the White House with senior officials from the Trump administration. What I would say is that if we discussed the merits of the project. Clearly, there's a lot of interest in buy-in, and clearly that's evidenced by the Fast 41 designation, I should say. But also, part of those focus of those meetings is better understanding, the priorities of the administration, how they're going to approach future funding opportunities, etc. So it's too really premature to outline any sort of commitments, but I think there's an ongoing dialogue there And and by virtue, just really kind of again demonstrates that we've got a very strategic project, and I think the broader investor market hasn't really sort of gotten onto that yet. So we look forward to continuing that sort of dialogue.
Thanks, Ian. This may be our last question, and if we haven't got to your question, as I said in the introduction, we will attempt to do so offline. But the following question reads, given the McDermott project's robust PFS economics and its strategic importance as a FAST-41 designated project, can you provide more detail on the specific criteria or partner profiles you're targeting in the ongoing strategic partnership process, and how you plan to balance potential dilution with maximising shareholder value as you advance towards the feasibility study?
Yep. No, good question. I think, if I just zoom out for a second, we commenced that sort of strategic partnering process in April, and this back work stream was part of that broader, process. Excuse me. We've had good dialogue with on the I guess from the more traditional joint venture offtake type partners. Had good conversations with a range of different groups, and we'll continue that dialogue with a view that this is a really big project, and so we need close alignment with customers, and we expect to sort of build those relationships over the next 6 to 12 months, particularly as we start a feasibility study, because we really want the feasibility study to be aligned with customers. In terms of joint venture or whatnot, look, it's too premature to say around that. I think our goal has been to really reduce our dilution. That's part of the rationale on this SPAC thing, giving a high look through value and ability to fund the McDermott, and then being able to put us in the best position in a number of years' time to be able to raise the development finance. And what I would say is that the SPAC transaction clearly demonstrates the investor appetite from the US and provides a better market for value for any other of those down the track conversations around potential joint ventures or whatnot that might form part of a development financing down the track.
I want to say thanks very much for the presentation and Q&A session to both Ian and Lindsay. It's a very exciting transaction, clearly potential to add a lot of value to Jindalee shareholders, and it makes a lot of sense to list the company where the project will list the project where in the same jurisdiction as where it exists. So thanks again to all of the attendees. I don't know if Ian or Lindsay may have any closing comments before we wrap it up.
Lindsay, I'll leave that to you.
Yeah, look, at the risk of sounding a little bit like a broken record, I just want to reiterate the risks. I don't want investors to leave thinking this is completely risk-free and it will complete and will be Newco shares will be trading at $10 or above. There are risks to completion, but as Ian mentioned, he mentioned asymmetrical potential for asymmetrical returns, i.e. the upside is significantly greater than the downside should the transaction complete. And I think for those that have an appetite for that sort of risk reward profile, I'd recommend you have a much closer look at Jindalee and what we're doing.
Thanks very much, Lindsay. We'll wrap it up there. Thanks very much for everyone's attendance, and thanks very much for the presentation, Ian and Lindsay.